We're moving through the late morning session here on Wall Street, and so far the tone is cautious but engaged. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. The big new wrinkle this hour is a tale of two risk stories. An eye-popping Bitcoin forecast on the upside and a fresh Bank of America sell signal on the downside. According to reporting from MarketWatch, a new Wall Street forecast is calling for Bitcoin to rally toward $143,000 next year, driven largely by continued adoption of spot Bitcoin ETFs and broader digital asset acceptance. That kind of target injects fresh speculative energy into the crypto complex and often bleeds into related equities, miners, exchanges, and some of the hypothetical names. Traders will be watching to see if that call actually translates into sustained flows, or if it's just another headline pop in an already volatile corner of the market. On the flip side, also via MarketWatch, Bank of America says one of its key indicators has flipped to a stock market sell signal. The trigger, they note, comes from heavy inflows into equities and broad participation in the bull move. Historically, that setup has sometimes preceded sizable pullbacks. For professionals, this doesn't usually mean hit the eject button on everything, but it does tend to shift the conversation toward risk management, tightening stops, reassessing leverage, and watching for signs of exhaustion in crowded trades. Layered on top of that, there's a macro backdrop that's still very much about the consumer. Quentin Futrell at MarketWatch highlights comments from President Trump dismissing affordability concerns as a hoax, even as tariffs, an AI-driven capex boom, and geopolitical tensions keep pressure on prices. The takeaway for markets: if 2026 brings more consumer pain, higher costs, sticky inflation in services, or renewed tariff waves, it could challenge real spending power, and by extension, earnings for retailers, travel, and other discretionary names. That's the slow burn story underneath today's flashier headlines. In terms of under-radar themes, a few personal finance pieces climbing the news stack are worth having on your broader radar. There's detailed coverage on Social Security rules for former spouses, stories about Americans still servicing student loans into their 60s, and guidance on handling sudden windfalls like a hypothetical $50 billion Powerball jackpot. None of that moves the S&P ticker for tick, but taken together, it speaks to a consumer base that's stretched, uneven, and extremely sensitive to policy changes and interest rate paths. Longer term, investors will be watching whether that strain shows up in credit card delinquencies, subprime auto, or demand for lower-priced alternatives across sectors. Into the next hour, I'll be watching three things: whether this Bitcoin call sparks a broader momentum chase in high-beta assets, how equity indices trade in the shadow of that Bank of America sell signal, and any further commentary that sharpens the outlook for consumer affordability heading into 2026. We'll connect those dots for you into the closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.